Ladies and gentlemen, it's me, James Sweeney, coming at you from the broadcast booth above the floor of the New York Stock Exchange. It's been a wild week on Wall Street. I'm ready to run out of here, but before I can, I've got to do this report. So you know what time it is. It's nearly 4 o'clock. The markets, they're about to close for the week. We have a month coming to an end, a new month ahead, and a lot going on. It's time for happy hour here in the Big Apple. As the trading week prepares to close here at the New York Stock Exchange right behind me, investors around the globe continuing to wonder if the heavy losses will continue or if a rebound is somewhere in sight to start off next month, because this week made history, not for anything really positive, as the U.S. markets saw their worst week since the financial crisis back in 2008, as the coronavirus continues to spread all across the globe at an alarming rate. With the coronavirus being confirmed in numerous countries outside of China, including New Zealand and Iran, and Nigeria, Israel, Italy, Brazil, Lebanon, Japan, Korea, here in the United States, and many other nations, well, U.S. stocks and global stocks taking quite the tumble as investors began to worry over the coronavirus impact on the global economy and overall sentiment of the people, because several companies already issuing earnings and revenue warnings, such as Microsoft saying that one of its key divisions may not meet the company's previous revenue guidance, and PayPal even warning about Outlook, and even Japan, which is acting quickly to preserve the upcoming Olympic Games this summer, requested that all elementary, junior high, and high schools nationwide that they should close starting this upcoming week to kick off the month of March, this as students start spring break, which typically ends in early April. And all this news paving the way for a series of heavy market losses. In fact, not only were there multiple sessions of 1,000-point losses, but on Thursday, the Dow plummeting nearly 1,200 points, its biggest one-day point drop ever. And today, the Dow Jones dropping another 1,000 points again intraday, more than 4% to trade below 25,000. This as the benchmark U.S. 10-year Treasury yield continued to touch a fresh record low. Keep in mind, it wasn't that long ago, February 12th, in fact, that the Dow Jones closed at a record high, and the S&P 500, which was at an all-time high just 2 weeks ago, in just under 1 week, the index entered correction territory, marking the S&P's fastest drop outside of a one-day crash. And just how bad was the weekly drop? Well, heading into today's trading session, not including today's 1,000-point intraday drop, the Dow Jones and S&P 500 down more than 10.5% each for the week, on pace for the worst weekly performance since back in 2008. And with that stated, kick back, relax. I'll see you guys all next week and next month. I'm not going to speak about sports because now's not the time. For Modern Wall Street, I'm James Sweeney.